Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights, help boost your trading potential. Coming up, U.S. markets under some pressure this morning, led by declines in AI names. Investors growing a little uneasy about valuations. Palantir, one of those stocks, despite an earnings beat and strong guidance. We're going to dig deeper into that in today's technical take. And our trading debaters are standing by, ready to dive into a big burger battle with the bull and bear cases for McDonald's. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. About a half an hour into the trading day, we do have some downside pressure. Let's take a look at the S&P 500, a barrage of earnings to digest on the AI front, cruise lines, Uber's out there as well. Lots going on, AI names. Let's jump into the heat map, see if we can explain what's happening here with this pullback. You can see a lot of those big tech names that really run up on the AI excitement. From day to day now, it seems that question keeps popping up. Is it worth the valuations that we're seeing in the market right now? You got Nvidia, Microsoft, Apple, Google, Meta, all to the downside. And there's Palantir. Let's take a closer look at that one out with its latest earnings. This could be a case of when good just isn't good enough. Downward pressure on the name despite a pretty strong quarter and a pretty strong outlook. Our Jason Natt is going to dig deeper into the name in just a moment's time, get into the charts for us as well. It's been quite a run for this stock, 173%. This year through Monday. Let's take a look at Yum Brands as well. We're talking fast food with McDonald's later in the program. Of course, Yum has different brands like KFC under its belt. It appears, though, the strong demand here is from Taco Bell and some improved sales in the United States for KFC. The problem child here is Pizza Hut. The chain saying they're going to review their strategic options for that chain and see what they can do with it. And that's your market update. Right, joining us now for a more technical take on what is happening in the markets, here Amin and Jason Natt from our Direct Investing Education team. Always great to have you guys here. We got a lot to talk about. There's a lot happening, a lot of moving parts. You're going to start with the semis here.
Yeah, let's start with the semis, Greg. What I'm going to look at today is an overall sort of index that makes up a majority of the semiconductors, the PHLX Semiconductor Index. SOX is this ticker symbol. So it makes up about 30 of the largest U.S. traded companies that primarily are involved in the vertical sort of aspect of semiconductor, coming from design, distribution to manufacturing. So our big flagship names, NVIDIA, Broadcom, AMD, as part of that, amongst some other ones there. But why I want to look at them, because we just did the hyperscalers last week, and now we roll into the semis. We got AMD reporting earnings today. Next week, every Tuesday is the big ones coming out. So then we have followed by AVGO, Broadcom next week, and then the following week will be NVIDIA on the 19th.
Tuesdays.
It's Ship Tuesdays. It seems to line up that way. So what going into this, we're going to see a bit of volatility because we've known that the hyperscalers just announced a lot of upward revisions on their capex, and the chips, or the chip manufacturers, are going to be the beneficiaries of those, especially with the demand that's been happening there. So to hear more about that, but also the U.S.-China sort of freeze or trade truce that's been in place. Now, yesterday the news came out that Nexperia, one of the companies that builds out automobile semiconductor chips, Washington's allowed them to resume shipping. So this could maybe set the pathway for some more broadly applicable lift on those export restrictions that were in place. But also the big other news that came out was, if this happens, a lot of these companies took impairment charges. AMD, NVIDIA took impairment charges, which they did show on the books in the last quarter, but we'll hear to see in this earnings whether that still trickles or if there's any lingering or they can get that inventory cleared out. Looking at the charts, though, it's been defiant, of course, similar to the whole space itself. We've seen this long bullish channel that has been forming since those April lows. It's been maintaining it within this reasonable band here, but you can see right now where we're at, it's broken out of that channel now. And what that signifies usually is we want to see prices tend to mean revert. And in this case, you can see this yellow line I'm just going to point to, which is our 21-day moving average. This has been widely respected ever since that move. It's kind of hovered between that price. I do anticipate a little bit of a pullback, mainly because there's one sort of indication or marking that I put up is how divergent the price has broken off from its 150-day moving average. It's the biggest divergence since like going back in July 2024, where it's peeled away the price. So at this level, level, we're also running into this resistance on the index as well. So we did see a bit of a pullback with the markets declining coming into today. I do anticipate it retesting that 6,900 area, which is currently was resistance previously. But if we retest that level and bounce off it, we'll know that's a valid support area going into this earnings print, because a lot of these companies are already priced to perfection. So this is one to look out for coming in for the coming weeks there.
Right, here's an interesting one. QTOM, Defiance Quantum ETF. What's happening here?
Yeah, we're still harping on that theme. So quantum computing is sort of making big splashes in this whole space. So QTUM is an ETF that gives access to basically quantum technology. It has a bit of AI plays into it. It's made up of 74 different companies. The notable ones would be IonQ, D-Wave, Rigetti Computing. Again, why am I looking at that? Because there's a spat of these quantum computings that are going to be reporting between, let's say, starting tomorrow up until Thursday, the majority of them. Now, quantum computing is kind of brought into the foray because earlier in this year, they had a quantum computing day NVIDIA hosted. At the time, initially Jensen Huang had commented that we're still maybe a decade or so away from it.
Yeah, that was a bad day for the quantum computing
And that was a
stocks.
bad day, of course. We saw it peel back. But then, since then he said, I think that time scales is being accelerated quite a bit, where it's probably going to come into market a lot sooner. But essentially what it does, it's able to solve complex problems and identify data patterns at more efficiency and scale than anything else that we have. And just to give you a comparison, a quantum computer who can solve a complex problem in a matter of minutes, whereas a supercomputer can do it in millions of years. So we're just talking about the level over here. The companies specifically...
Scared me when you referred to a quantum computer as who?
Yeah.
Like a person, but that's a different story.
Yeah, exactly.
That's a different conversation.
We'll get to that maybe. But D-Wave, IonQ, and Rigetti, these are three different quantum sort of manufacturers that are out there, use different technologies. They'll be reporting earnings this week. So we want to see what that does, what that shakes up. The way the charts have been forming though, Greg, we've seen the clear bullish intermediate trend that's evolved here. It's kind of respecting this trend line. It's also respecting its 21-day moving average again, which is this yellow line that we have here. But we run into a bit of a ceiling here with the resistance at $115 level right now. Today morning, of course, it did pull back right back into the 21-day moving average. It might still have some room to play down just to retest it, mainly because a lot of these companies are not profitable yet. So we should make that. And they're also traded very significant high multiples. So if there's a valuation story that doesn't break markets, it certainly leads to corrections, and we might see that come at least coming out of this earnings.
All right, two important spaces to watch. Let's jump back into Palantir, Jay. I mean, from my point of view, you read the headline about the quarter past and the projections going forward. You're like, what's to quibble with? The street is quibbling.
You're right, and one of the headlines leading into earnings that I read was Palantir earnings are never boring, and that was certainly true. Watching things play out in the after hours. Yeah, there was a beat in terms of earnings per share. They were expecting 17 cents, came in at 21 cents. Even a revenue raise of a target up to 4.4 billion on top of the 4.14 billion. So quite a significant expectation in terms of money coming in the door. Domestic sales were a big winner in terms of not just government sales, we're talking commercial sales. They were up 121%. So there's lots of good stuff. There's new partnerships with the government around the IRS, around $400 million deal. That's the State Department. The IRS had another large deal and partnering with NVIDIA, who seems to have its fingers on a lot of stuff around the market. So these are things that were interesting to hear, but there was still a broader pullback that we noticed here. And if we jump into the charts, that's really going to play itself out. One of the things you mentioned is, when talking higher multiples of PE, we're talking 688x, which is very inflated. So the prices, if we're getting good reports but not great, then you might start to see those higher multiples not able to hold on to prices. But here we've seen a pretty tight channel for the stock trading up over kind of an extended period of time. We did see a big gap up on the earnings two cycles ago, and it quickly filled in that gap, but the stock still stayed pretty tight in that channel. What I was noticing kind of earlier was after we were able to confirm back above that gap area, it's beginning to form a bit of a bullish triangle that we can see here in yellow on the screen. One thing that's especially it's kind of really jumps out to me with yesterday's earnings action, we broke out to the top side of that triangle, meaning that we're looking for kind of a trend continuation out of that. But what's kind of common with these things is that we're going to break out, but then there's a retest of those breakout points. Right now, that's exactly where we're in. We're pulling back that 190 kind of price level that you can see. This really kind of this red candle that's displaying there. That's kind of right touching on that line. We're still kind of on that breakout zone. If we can, we'll see if we'd like to see a couple more additional candles to see if we can get ourselves back towards kind of price exploration mode. But yeah, that's kind of we're at a significant point. That pullback was certainly dramatic to see on the positive news.
Yeah, dominating my heat map right now for the S&P 100. Palantir down about 7.5%. Thanks for that, guys. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. Once you're there, you can try out the platform risk-free. Just open a practice account by clicking on that Try TD Active Trader button. Then when you're ready to switch to a live account, simply export your workspace, start trading for real. All right, it's time now for Trading Debating. The stock in the spotlight this week is McDonald's, the Golden Arches, one of the most recognizable fast food brands in the world. Before we get going with that debate, though, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Back to the stock of the hour, McDonald's. What made you guys pick this rather random, obscure name to debate?
Well, for one thing, Greg, you know, they are a focal point of American food culture, and that food culture has just gone global, of course. So that's a big point, and it's almost becoming like other countries' food culture as well, just to get a piece of it. And then, of course, how can you forget those iconic golden arches? That's part of their brand identity. So thought I'd put
You
it
can
to
really
a
ask
test.
anybody around the world in those golden arches. They know exactly what they're going to mean. And then speaking kind of more broadly, McDonald's being their place in kind of the stratosphere, they're a bit of a bellwether for the economy as well.
Yep.
So.
Exactly. When families are feeling the pinch, maybe even a McDonald's meal is a little too pricey, but I'm not going to jump on anyone's arguments here. Let's get some time on the clock. You're each going to have 2.5 minutes to make your case. Then we're going to get you some time to counter. You guys draw from a hat as always. And what do we got? We got Jason as the bear on McDonald's.
I'm the bear here, so I'm going to fight the good fight on McDonald's. Now, I'm going to put this out there.
It's ironic.
It is very ironic, and I'm sure you'll explain about that later. But I do have 2 teenage boys at home, and if they found out I was arguing against McDonald's for the show's purposes, I would definitely get some eye rolls. I know that for a fact. But thinking beyond my house, as I said, McDonald's is often seen as a bellwether for the broader U.S. economy, tracking consumer spending, impacts of things like inflation. I know with the economy starting to show some softness, we've seen pesky inflation rates are starting to rise. Unemployment is rising, except for earlier in June. So it's going to be interesting to see how that is going to play out for them long term. Now, the golden arches might be starting to show some cracks, and it might be the gold-plated arches maybe don't kind of ring as fancy as the golden arches, but we'll see how we've got here. So a couple things I want to lay out here first. One would be around that consumer demand is potentially weakening. Same-store sales in Q1 of 2025, they dropped to by 3.6% in U.S. and 1% around the globe. I know the globe is a big point of emphasis for them. That's the biggest drop since the pandemic. And management has noted that's coming from not only lower income targets. So that tells me a couple things. It's hints at lower traffic as well as lower order sizes, which for somebody that's really dependent on traffic and order size, that can be a big piece. And next thing is margin squeezes. So one of the big things, they're selling burgers, right? This is the burger battle. But tight global beef supply and prices are on the rise. So that's when margins are already tight, that's going to lead to some really tough things. And McDonald's doesn't buy their own beef directly from farmers. They're actually buying the pre-made patties, so they might be getting kind of double dipped on increases that might come in. And lastly, around margins is around labor. Labor costs, they're not going down, right? So that's one of those things. That's a huge factor threatening their cash flows that could have a significant impact on their flexibility. All right, let's take a jump into the chart so we can see kind of how the technical picture is laying out. I've got a long-term chart that's here up in here. This is a 5-year weekly chart. We can notice the trend overall is bullish, but I did notice a kind of a double bottom, which is a bullish signal. But what I'm noticing here is that we didn't get confirmation out of this. We actually retested down into a more of a bullish kind of ascending ascending triangle that as we play through this triangle, the higher highs have begun to wane. And if we get a breakout down below, that could signal us into kind of more price uncertainty. Let's kind of take a look at this on a more shorter term, trying to putting some signals together. I've been able to identify here, it's kind of a double rounded top feature, kind of a flip side of what we were looking at from the long-term chart, showing us weakness towards the downside. We had a triple moving average cross that could push us down below this even further.
On that longer-term chart, our producer Alicia observed, perhaps even coined a new technical. If we can you bring the longer-term chart?
Yeah,
up
we
again?
can.
Was it upside down arches?
The upside down.
Yeah.
Upside down arches. Maybe that could be a new thing. I don't know.
Okay,
There
we go. All right.
That's what our double bomb is going to be now.
Thank you, Alicia.
A new technical indicator is born, courtesy Alicia Harvey. That is the bear case. What would a bull say?
All right, and I'm going to just expand on the story that Jay started with. So given that I'm a vegetarian, I have very limited options at McDonald's. So I'm not as much of a fanboy as maybe Jay's household is, but I do enjoy the occasional fries, and now that they have a McVeggie option. But as a business, though, I will say that McDonald's isn't just about serving Big Macs and fries. It remains a resilient powerhouse in the quick service restaurant segment, the QSR sector. It's a global leader in fast food. And it delivers high margins, which I'll go into in just a moment's time. But it's also, it makes it a defensive play with offensive upside. So that's what you got to look at when we peel back the numbers. So let's talk about their moat, first of all, because it's unmatched in the global scale. So they have a very powerful brand equity. We talked about it, teased it up at the front, the iconic golden arches, of course. Gilded golden arches. Great, Jay likes to say they're plated, but I'll say they're gilded golden arches. Global franchise models, they have over a footprint of about 44,000 locations worldwide in over 100 countries. Now, they dominate the US market with about 21% market share. They have 2,200 planned new store openings globally in 2025, and they're going to really focus on the high growth areas like India and the Middle East, which is really growing in double digits there. They also plan to open 10,000 new stores by 2027. It's the fastest expansion in history. And when you think about the trajectory they're on, it means that demand is very much there in these different markets that they're part of. But the other thing that I want to talk about is the asset-light model. It's a franchise economics. Like many of these businesses, McDonald's franchise is 95% of the locations, and that's where it earns a bulk of its revenue. And these are consistent revenues. Regardless of inflation, you get franchise fees and leases which are committed for long-term purposes. So this in itself is a bullish story that's unfolding there. And then let me go into the charts, and I'll save my points here. What I want to do is start with the zoomed out view of McDonald's. I've got a monthly chart put on here, so each candle represents a month worth of price action. And we're going all the way back to 2015, and I just wanted to point out that we've maintained this strong monthly bullish channel. Every time we've come into this lower band or this lower support, it's been rejected off of that and bounces back towards the top. And you can see it's tested it. This is the only time where it closed below that band, but it did not subsequently confirm. And what we want to see is if it pulls back below, we want to see the next candle closing below and making a lower low. It didn't do that. This was the COVID pandemic. And ever since then, it's always respected that in place. And this is where we find ourselves at the moment over here right now.
All right, now it's time for the 3 minutes of unobstructed, unstructured countering. I don't know, we'll call it a food fight. Get slinging, boys. How messy is it going to get? Is it buns or is it like ketchup, mustard? What's going on here?
All right, I'm going back to beef here because it's a big. I got some real beef here. But I want to focusing in here on both the U.S. market and the European market. It could be a major headwind for McDonald's. This is the worst cattle shortage in terms of kind of livestock in 70 years. Multiple factors are at play here, but it's maintenance costs, labor shortages, all playing into that. And we take a step back, looking at McDonald's from a pricing point perspective. Food prices in McDonald's are rising dramatically here. We're talking 40% of their menu has increased in terms of its price from 2019 to 2023, and we're thinking sluggishness in the economy. We're talking 40% more cost at the store. That doesn't bode well for long-term success.
Well, let me tell you this, Jay. Yes, you have food costs, that's your biggest cost that's going to rise, but here's where McDonald's stands out. It comes to pricing power. If you look at their margins and you compare the overall food industry, McDonald's net margins stand at like low to mid 30s. And if you look at the competition, the competition is sitting in about like the high single digits, maybe low double digits when we talk about it. So they're able to control their costs. Not only that, but they're making investments in AI and tech expansion, which is really helping this because they're using AI predictive models to help with inventory across the stores, and that's helping reduce labor costs by up to 10 to 15% and also improving order accuracy. So they're using this technology play to really help them leverage whatever they have with the pricing powers that go along with it. And then also when you talk about like operating margin, again, way surpassed. You're talking about the target that they have, the ambitious targets is sitting in the mid like 50s with operating margin. Again, better than any competition out there.
That very well might be true, but what you can't control is kind of broader trends in the market, right? If we're thinking about move towards, if you're paying a premium for what you get as a premium product, well then maybe you might be easily shifted. Sure, McDonald's might have a high moat, but there's a very low barrier for entry for competitors into the space. And this is an argument that really rings true after last week's debate we had around kind of obesity drugs and GLP-1. The market is shifting. People are taking appetite suppressants.
You're building healthy elements. They're doing menu innovation as well. They're catering to these folks. The prime example was they're bringing more plant-based menus on their items, the salads and stuff that they treated. Let's be real. No one wants to eat a salad after 2 o'clock, so they're still sticking to the core strategy of greasy fries and a burger. That's their bread and butter. But they're thinking of this innovation as well, bringing to the methods. And for someone who are health conscious, but going to the point where we talked about inflation, people are going to be price sensitive. And the value perception, we just talked about this. We saw double growth happening or single-digit high growth on Taco Bell. You're going to see something similar in McDonald's story as well when you compare it to the current market and conditions we live in.
If we want to bring it back to salad as well, one thing is it's all about reputation. If you want to make sure that you walk into a restaurant, you're going to walk out healthy. 104 people across 14 states leading to 1 death in McDonald's from E. coli breakout. It's never a great headline to lead with.
Well, you know what? That affects the food industry as a whole, but you got to deal with it.
All right, spirited debate on that one. Let's jump into the platform. And if you're going to be a bear on this one, how could you possibly play it through options, Jason?
Yeah, so this is leading into any earnings event. I like to make sure that I've got kind of my risk and reward kind of in an appropriate level of balance. So with this particular trade, that a bear could play would be thinking about doing like a bear put spread. So this is a debit put spread where you're outlaying money to purchase puts but also selling further out of the money puts to bring in some extra cash to kind of offset the upfront risk that we're taking on. So let's go ahead and jump into the chart. There's a couple other indicators kind of help me kind of point towards drawing a kind of a bullish thesis here. One I want to point out here, we've got our money flow index. It's still trending down. We've not exceeded our oversold spots, so we could leading us towards an additional bullish projection. And if we also take a look down towards at the MACD is also trending down. We just had a negative cross in terms of these over the signal line. But we're thinking one last indicator I do want to bring in here is kind of something we call a Keltner channel. A Keltner channel is also showing me, we can see that it's up here on the top of the screen with the 2 other supporting oscillators that are showing us that we still have potential for downward movement. We are showing that that the last 2 times that the stock has achieved that we've not been in completely bearish territory with those other indicators. We maybe have some additional downside movement. So the way we could accomplish this would be kind of buying a near the money put. We're talking 295. I've decided we could potentially stretch this out to widen out our profit zone by then selling the 275. So we've got a $20 wide put. If I bring this over, I've got profit and loss figures there for you, Greg, because I know that's always that's one of your favorites there.
You guys are so good to me.
So the ideal case for us would be if the further it's going to go down to 275, the more profit we stand to make in this particular case. Break even is only at 288.50, so well inside the expected pricing range for the stock over the 45 days we've got to expiration. So a bear put spread could be a potential option here.
All right, potential option there. Interesting on the bear side. What could a bull possibly do here?
Yeah, so if you're looking with a bullish thesis and you want to play the direction, Greg, so McDonald's is a stock that doesn't generally move that much during earnings. It has a decent move, but it's nothing like a tech stock. But just bringing up my charts first, what I wanted to map out was just looking at the way that it's price action on a daily chart. We see it come into this demand zone where we do expect a bounce coming off of it. And it could possibly retest and break out of this pattern and go into this close into the supply area at the 315. So for this, I want to play a directional move to the upside. Also, volatilities generally tend to, compared to its historical levels, low. So there's a further impetus to go long on a strategy versus doing an income strategy. So one way you could play this out is by doing a long call condor strategy. Now, what we want to do again is we're very mindful of the cost that we have as part of this trade. So this is why I'm doing a long call condor strategy. It's made up of 4 parts to it. And so what you're looking to do is we're looking to buy pretty much the at-the-money strike on the call, which is 295. We're selling about 15 points out at the 310 level to kind of find an area where it might take pause, especially given how the at-the-money straddle is pricing. A $10 move is what the market's pricing for the earnings. So that kind of puts us right at that upper band there. And then to further reduce my cost, because it's earnings again, I want to sell the credit spread just a little bit further out from that, which is what we have over here. So that's the 315 strike, and then buying the 330. So we're still keeping a 15 wide across the two. And right now, or I shouldn't say right now, this trade was costing, when we set it up, we're looking for an entry point of about $4 on this trade. So that means we're spending $4 net debit as the cost of our trade. Our break-even price would be $299 on the first leg of it initially. But because this is a condor strategy, it in fact has a second break-even. So what this means is this trade can work against us if it runs up too much. Essentially, we want it to stop at about 310 or at least before 315. But once it crosses into the 315 threshold, then we have a second point of break-even price, which is at the 326 level. At that point, if it goes beyond 326, then we will incur a loss on this trade. But the loss is always defined on this trade, and it's always going to be what we spent.
You got it defined for us right there.
Exactly. We're looking to spend we're putting 400 in, and that's what we stand to lose if it breaks past that 330 level on the top side, or if it fails to, stay above 295, essentially in this earnings print. That's what we stand to lose. What we stand to make, essentially, if it gets to that 310 level, that's our ideal situation. We take the spread, which is $15 in this case, minus the $4, easy math, $11 on single contracts equals $1,100.
All right, great work, guys, and a name that everyone understands. My personal relationship with McDonald's. Some people, when I saw my social media video about how I don't eat fast food, and I'm being made fun of for being Mr. High and Mighty, but I spent almost my entire high school career at a McDonald's. One in particular, if you grew up in Bramalea, you're talking Torbram, East, and Highway 7. And I guess in the age of social media, if kids were looking for a party, they just talk on phones, right? Then we would go to McDonald's in the late 80s to try to figure out where the party was. And if there was no party, then the party was at McDonald's. That's what McDonald's played the role in my life. A lot of
took over the playground, did you?
I don't know if I should look back on all that fondly or not. I think the restaurant didn't like having a bunch of 18-year-olds hanging.
So is there nostalgia happening soon, Greg? You're going to hit up on that location there?
I might have to go. I might have to break my see what if it's rocking at 11 o'clock on a Saturday night. All right, guys, thanks for laying out the bull and bear cases for McDonald's. Just a reminder to our viewers, this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you were talking about the Keltner channel. You're going to elaborate on that.
Yeah, we did a really brief kind of interlude during the trade display. Let's kind of give it a little bit of time kind of in the spotlight. Now, the Keltner channel it's got a very similar look, like a banded look, kind of like a Bollinger Band, but they get to the bands in a much different approach. So maybe we just jump into the chart. We can kind of talk itself through. So you can see here, the blue line that's in the middle of the Keltner channel, that's a 20-day moving average. The red lines, the upper and lower bands, those are the 2 times the average true range on that particular stock. So it bounds. I've got the average true range down below to kind of give us some sense. Average true range itself is just giving us what the average kind of range between the high and the low is over an average number of days. And then the Keltner channel is just expanding upon that and making the band at 2 times around the price. So the way that we can use this from a trading perspective is it's giving us kind of based on past trading history, kind of what the expected kind of highs and low ranges are going to be, whereas Bollinger Bands is basing that off standard deviation. So it's a little bit, once again, different way for us to get here. We're still going to trade it in the very similar area. We can see if the stocks are riding along the upper band. We could be looking for some sort of mean reversal back to that simple moving average. When we do get crosses from the upper side, which we thought of as the bullish zone, we look for crosses down into the bearish zone for taking potential trading opportunities. And same thing when we've got trading outside of the bands, we're looking to see if it's going to cross back in and cross in below. But once again, this is just a Keltner channel is a fancy way of plotting on your chart 2 times the average true range that the stock has demonstrated over the number of days that you've set in your particular average.
Very interesting stuff. If you have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters here go head-to-head on, send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It'll take you to our TD Active Trader Live website, and if you scroll down, you're going to find a tab that says Join a Live Masterclass. This Wednesday, 2 p.m., the team's hosting an interactive session about TD Active Trader. It's going to explore all the main features the platform has to offer, Registration is required, and it's open now. Before we wrap up, gentlemen, some of the other key things that our investors are focused on this week. What is on the radar?
Yeah, Greg, so this week, big one's going to be Fed speak. It's a critical week for that. After that last week's FOMC announcement, we've entered a new phase, essentially. So the Doves and Hawks were united in terms of the response.
Will they or won't they in December question now,
exactly,
right?
That's all it's going to be about. So Lisa Cook already had some announcements. She said, the December meeting is going to be live. So I think they're going to, we'll kind of parse back into what that means. But we've got 4 other speakers, Michelle Bowman, the Fed Vice Chair Philip Jefferson on Friday, amongst some others, that are going to be speaking on this as well. And then Stephen Myron is also speaking on the biggest dove out of all of them on Friday as well. So we'll be on the lookout for that. But you've also got data coming out. Now, it's still private data because, again, the government shutdown is still on. It's going to be running to the longest, potentially, I think, if it closes out today or tomorrow, the longest in the history so far in terms of the shutdown. So 2 notable things are going to be of importance: the ISM surveys and ADP employment report. This is the private payrolls number, essentially. So what the market is going to look like, it's going to be similar, valued or weighted like the NFP report, the non-farm payrolls. So expectation is for a 25,000 increase in the private sector payrolls, which is low, but it's better than the 32,000 decrease that was in September. So that'll be something market moving tomorrow that we may look to see. But turning my attention again back to earnings, we've got earnings still in focus here. The one I'm going to look at is ticker symbol is IREN. Iron Limited is what it's called. So this is a company from Australia that focuses on really 2 rapidly growing areas, AI infrastructure and Bitcoin mining. I would almost say it started as a Bitcoin miner and it's gone into AI infrastructure, and me and Jay were talking about this. So what these neo sort of data infrastructure companies are is they've sort of turned away from Bitcoin mining or mining into AI plays now. So they provide infrastructure to because of the high energy requirements that are part of mining.
You've got the servers already, right?
Yeah, you've got the GPUs and everything. So they're just repurposing it now and monetizing that. So this company specifically still does its Bitcoin mining, but it has a lot of excess capacity, which is now emerging and leasing it out to these hyperscalers. Notably, they have earnings coming on November the 6th. EPS is coming in at 16 cents. This would mark their first positive EPS expectation coming in. That marks a 300% year-over-year growth for them on 245 million revenue, which will be all-time numbers coming into this earnings print. That's some big news. They are NVIDIA's preferred partner. That status, what that means is they have the preference access to NVIDIA's latest innovation. But the big news this week that dropped yesterday was they inked a 5-year deal with Microsoft for $9.75 billion, which means they will be giving out or leasing their NVIDIA GPU GB300 GPUs at their Texas data infrastructure capacity facility, which is about 750 megawatts as well. So that's a big deal for them. They still have about 2.9 gigawatts of capacity across the board. They do have presence in Canada as well. They have data centers out in British Columbia, but the biggest one is in Texas as well. So coming into this, we'll be keeping a close eye on that. Now, one thing I've just looked on the charts, it has sort of like this sort of nosebleed rise on the pricing. It has respected this trend so far that it has formed. However, we did see a little bit of a break. We didn't see a confirmation because we want to see a break and make a lower low on 3 consecutive candles. It kind of pulled back and went back. And it has formed this double top pattern at this $75 resistance, which it rejected, surprisingly, off the news of Microsoft yesterday. So it hit that high, rejected off of that. Now, we are coming to today just testing that trend line, but it is still respecting it. So there's 2 things that can play out here. Given the earnings print, we could see a catalyst where it could push past that 75 level. If it doesn't, we could break below that trend line, and it could form this double top pattern where we see the next support being at the $50, and if it breaks that, we could see a further pullback. Remember, these companies, again, similar to Palantir, highly trade on high multiples, sometimes in the thousands as well. So it could be a little bit of a course correction with this earnings.
Interesting name to keep an eye on. You got some Apple Oven.
I got some Apple Oven here. You got it. So this is a company that I was relatively unfamiliar with. So it was really interesting to kind of dig in and see what they're all about. But they're a digital kind of marketing firm that that harnesses what, like everything else that seems to be in there, is they're using AI for not only industry data, and they're not only to do some analysis to look for trends, but they're also using it to process things at microsecond speeds, and they're bringing together both advertisers and publishers for actually real-time auctions on sites and things like that. So it's a really kind of like quick speed to market with this regard. So lots of great information. This is actually interesting enough. AppLovin was actually included on the S&P 500 late in September, so that was big news for them. And thinking about the earnings that's coming up on Wednesday, the street's got a consensus of about 237 earnings per share and revenue about 1.34 billion, both significant increases over this time last year. Let's take a look at the chart. We can see this chart has been trending upwards. We're close to 100% gain over a year's worth of time. One of the things that really kind of jumped out to me, we had a gap up earlier in the year, kind of gapped up even before the S&P inclusion. We're typically going to see a bit of a bid up as some of the ETFs and mutual funds begin to include it that are tracking the S&P 500, but they weren't able to hold on to some of those gains. There's actually been some negativity that's kind of spiked out, and this is kind of around an SEC investigation around data collection and sensitive information. Not great kind of terms if you're in the tech space that you're not looking to hear those sorts of things here. But the stock was able to kind of hold on and kind of bounce off kind of an upper level trend. We did see a bit of a double bottom form here, but there wasn't confirmation of the breakout, so the signal's not confirmed. So the breakout back towards kind of those annual highs, they're still on hold for now. The numbers I'll be looking for is because just like a lot of the broader pullback that we've seen in the AI space, we'll be looking around kind of that 570, 575 range if we're not getting real kind of gung ho earnings out of the call. We could still see that sell off continue. Otherwise, we're looking for price projections out towards up towards the high 740s.
Okay, another great show and lots of great stuff to keep our eyes on going forward. Gentlemen, thanks as always.
My pleasure.
That's our show for this week. As always, investors should perform their own due diligence before engaging in trading. Join us again on Thursday, 10 a.m. Eastern Time, right here back in the studio. We'll be speaking with Bell Point's Chief Strategist, David Nelson. Thanks for watching.